Nigeria's manufacturing activity surges from 48.8 reading in November to 60.0 in December. And international banks have to this weekend to submit proposals for Oman's $1 billion bond flotation. And debt reading Venezuela issues a new dollar debt of $5 billion the first time since 2011. A warm welcome to our viewers all over the world. This is Business Incorporated with me, Busen here at China's global headquarters in Lagos. Let's get the show started from Nigeria, where manufacturing activity measured by a Purchasing Managers Index report released today by investment and securities trading firm FBN Quest shows a strong rebound to 60.0 reading in December from 48.8 in the previous month. The survey shows all 5 sub-indices rebound in December due to the traditional pickup in household demand for the festive season. FBN Quest believes demand is set to benefit from the federal government's expansionary fiscal spending, particularly from the pickup in capital releases. In November, the central bank also held a special foreign exchange intervention of nearly $600 million to local manufacturers to import raw materials, spare parts, and other accessories. Meantime, one of the world's leading rating agencies, Moody's Investor Services, has forecast a 2.5% GDP growth for Nigeria in the new year 2017. Moody's Vice President and lead analyst for Nigeria, Lucy Villa, told Sunday Punch newspaper that Nigeria's economy would bounce back this year, supported by ongoing recovery in oil production. The rating agency's chief says the government's balance sheet is strong, with debt at around 16.6% of GDP last year. Moody's, however, says Nigeria's weak institutional framework, in particular in terms of the rule of law, government effectiveness and control of corruption, which would have a significant impact on its economic growth and fiscal strength and constrain the country's B1 credit rating. Look at the markets on the continent. They're taking off on a mixed note in the new year. In Nigeria, the NSE General Index kicked off on a negative note, down 1.21% around midday today on a broad sell-off on the counter. The South Africa GSE was, however, posting good gains around 2 p.m. Johannesburg time. The GSE All-Share Index up more than 1%. In North Africa, the Egyptian market was stronger in the day alongside many of the Middle Eastern bourses. And you can see the Kenyan Stock Exchange 1.55. Sorry, that was to be a positive close on Monday. On Friday, when the Nairobi Stock Exchange traded last. Yesterday was a public holiday in Kenya. The market stays closed. 133.34 was where that was a bit of a typo down there at the bottom of the page. Let's cross over to the Middle East, where the government of Oman has asked international banks to submit proposals by the end of this week as the country prepares to issue around $1 billion in bonds. Reports say the Oman government plans to issue tranches of 5 and 10 years, either in the form of conventional bonds or sukuk, as it looks to plug budget deficit caused by lower oil prices. Meantime, Dubai Financial Center is following in the footsteps of Abu Dhabi Stock Exchange, looking to introduce short selling of stocks in the first quarter of the new year. The region's bourses, however, taking off on a red-hot note today, led in the main, as you can see there, by Abu Dhabi, Dubai Financial Markets, and the Qatar Stock Exchange, all above 1%. Meantime, the Saudi market was about 0.1% in the red. Bourses in Europe were jumping higher today on the back of a positive economic data from China. Crude oil prices also races ahead Tuesday as Kuwait shut down some 80 oil wells in compliance with last November agreement among oil-producing states to cut back some 1.7 million barrels per day and revamp flagging prices. Let's cross over to Frankfurt Stock Exchange for more on these and other headline grabbers, as Conrad Busen of DWTV for China Television join us via phone this afternoon. Conrad, it's good to see you in the new week. We started together yesterday, so let's start a conversation around the emerging Asian markets, kicking off the week on a very positive note. Will this be a strong stimulus for Europe and Wall Street today?
Yes, it will definitely, Busen. We don't see it so much here today in Frankfurt because the market here in Germany was open yesterday. Unlike other markets, Tokyo, Shanghai, London, Zurich, New York, all took a day off on January 2nd, so yesterday. So we are going to see it on Wall Street, but here in Frankfurt, the positive impetus of all this events in Asia already was sort of priced in yesterday. Behind all this optimism, of course, is, as you mentioned, the positive data coming in from China. Purchasing managers in Chinese businesses are continuously upbeat. That's reflected in both the Purchasing Managers Index calculated by the Chinese government, but also, more importantly, in the Purchasing Managers Index calculated by the media Caixin Group in China. This index rose to 51.9 points. This index, the Caixin Index, has the reputation of being a bit more reliable than the government index because, of course, it's less dependent on, government interests. Also, it more reflects the situation in Chinese privately owned businesses, and that's why it's so positive that this Purchasing Managers Index has risen.
Well, that's a little bit to the equity side of things, but let's look at the other side of the market, a bit of a currency conversation. Look at the dollar index, DXY, this morning. That's a very strong positive, 0.44% on a single day, started full global markets reopening. So what do you think is the technical and fundamental side of this rally for the dollar on one side and the euro on the other side, which is a major competitor to the greenback?
Well, both the technical and the fundamental side point to the upside for the U.S. dollar. All this is driven by the anticipation of higher inflation in the U.S., rising interest rates, and of course a fiscal boost by the new Donald Trump government. Since the election of Trump on November 8th, the dollar against a basket of 10 global currencies gained nearly 6%. But this also means that, of course, if Trump now fails to deliver, and quite quickly so, or in other words, if the expected upswing in terms of economic growth doesn't happen, as investors believe it will, the dollar's appreciation could prove premature and problematic. Now, talking about the euro in kind of represents the other side of the coin. This morning, the euro-dollar exchange rate slipped below $1.04 here in European trading. There are many people here who predict that we're going to see a 1-to-1 exchange rate between the dollar and the euro. That's also in technical terms called